If I had to start investing today in 2025 from scratch, what exactly would I do? The markets are at a strange turning point. Stocks are volatile, inflation is cooling but still sticky, interest rates are higher than we've seen in a decade, and new asset classes like crypto and AI-driven funds are reshaping the financial landscape. In this video, I'll share with you, step by step, how I would build my portfolio if I was starting fresh today, with no investments yet. I'll cover mindset, strategy, asset classes, and actual percentages. Whether you're brand new to investing or just looking to sharpen your plan, this breakdown will give you a clear path forward. Mindset before money. Before we even talk stocks, crypto, or property, the very first step is mindset and risk management. Because if you skip this, your portfolio will crumble under pressure. Here's what I would lock in first. 1. Emergency fund. At least 3 to 6 months of expenses in a high-yield savings account. Why? Because the market doesn't care if your car breaks down. If you don't have cash for life's surprises, you'll be forced to sell investments at the worst time. 2. Debt check. If I had high-interest debt like credit cards at 20% APR, I'd pay that off before investing heavily. No investment will consistently beat that guaranteed loss. 3. Long-term horizon. I'd remind myself that investing isn't about quick flips. It's about planting seeds that grow for 10, 20, or 30 years. Even if the market dips tomorrow, the plan doesn't change. Macro picture of 2025. Now let's look at the world we're investing in, because 2025 is not 2010. Interest rates. The U.S. Federal Reserve has kept rates high to fight inflation. Bonds finally pay a decent yield, something we haven't seen in years. Global tensions. BRICS. Nations are challenging the dollar, energy markets are shifting, and supply chains are still fragile. AI revolution. Every sector, from healthcare to finance, is being disrupted. Companies that leverage AI effectively are seeing massive productivity boosts. Crypto and digital assets. Bitcoin survived another halving cycle, regulators are tightening, and institutional adoption is growing. All of this means diversification matters more than ever. Broad market exposure. If I was starting today, my first building block would be broad market ETFs. Why? Because history shows us that over long horizons, the market goes up. S&P 500 ETF, like VOO or SPY, gives exposure to America's top 500 companies. Historically, 10% annual returns. Total World Market ETF, like VT, adds international exposure because growth won't come only from the US. If I was a beginner, I'd put 40 to 50% of my portfolio here. This gives me instant diversification, low cost, and the compounding power of the global economy. Bonds and stability. For years, bonds were boring, but in 2025, they finally make sense again. With U.S. Treasuries and investment-grade bonds yielding 4 to 5%, they provide safety and steady income. I'd allocate 20% into bonds, specifically a bond ETF that mixes U.S. Treasuries with corporate bonds. This cushions against stock volatility and ensures my portfolio doesn't swing wildly. Thematic and growth plays. Once the core is built, I'd take around 15–20% of my portfolio and put it into thematic growth sectors. This is where you chase innovation. 1. AI and semiconductors, NVIDIA, AMD, TSMC, or ETFs like Global X Robotics and AI, BOTZ. 2. Clean energy and EVs, solar, wind, and EV battery tech. 3. Biotech. With aging populations, breakthroughs in healthcare are inevitable. I wouldn't bet the house here, but I'd want exposure because these sectors could define the next 20 years of growth. Real assets and alternatives. Next, I'd look at real assets, things that protect against inflation and currency risk. Gold and silver. Historically strong hedges during uncertainty. I'd allocate 5%. Real estate investment trusts, REITs. If direct property ownership isn't possible, REITs provide exposure to rental income and commercial property. Another 5 to 10%. Farmland and commodities ETFs optional, but they diversify against food and supply shocks. Together, this gives a real hedge against stock market crashes. Crypto allocation. Love it or hate it, crypto is here to stay. But it's also risky. If I was starting in 2025, I'd keep it disciplined. Bitcoin, BTC. Digital gold, proven resilience. Ethereum, ETH. The backbone of decentralized finance and smart contracts. Small allocation to altcoins. Maybe Solana, Chainlink, or others, but speculative only. I'd cap this at 5% of my portfolio, enough to benefit from potential upside, but small enough that a crash won't wipe me out. Dollar cost averaging and strategy. Here's the golden rule. Don't try to time the market. Instead, I'd use dollar cost averaging, investing a fixed amount every month. Why? Because it smooths out volatility. Sometimes you buy high, sometimes low, but over time, your cost averages out. I'd also automate as much as possible, so I invest before I even get the chance to spend the money. Personal development and side hustles. One of the most overlooked investments? Yourself. If I was starting in 2025, I'd put money aside not just for stocks, but also for learning AI tools, building an online side hustle, improving my career skills. Because sometimes the best return on investment isn't 8% from the stock market, it's doubling your income. Putting it all together. So if I had $1,000 to invest starting today, here's how I'd split it. 50% broad market ETFs, S&P 500 and World Index, 20% bonds, 15% thematic growth, AI, clean energy, biotech, 10% real assets, gold, REITs, 5% crypto, BTC, ETH, small altcoin exposure. That's a balanced, diversified portfolio ready for 2025 and beyond. Conclusion. If I was starting today, this is exactly how I'd do it. Methodical, diversified, and focused on the long game. Remember, investing isn't about hitting home runs. It's about consistently showing up, letting compounding do its magic, and avoiding the big mistakes. If this video gave you value, hit that like button, subscribe for more financial breakdowns, and drop a comment. If you were starting in 2025, what's the first investment you'd make? Thanks for watching, and here's to your financial freedom. This is Felix. See you next time.